Ford shares are flat after hours following the release of its first quarter results. The auto company beating on revenue and earnings per share. Revenue rising 7% this quarter. Here now is Bob Shanks, Ford Chief Financial Officer. Thank you for joining us. Big beat on revenue. However, earnings per share stayed the same, and that margin at 5.2%. You know, a lot of folks on Wall Street were looking for you guys to improve that margin this quarter. What happened?
Well, we saw an increase in commodities of about $500 million in the quarter. So we held our costs other than commodities. We had a big increase, as you said, in revenue, and that was across almost every part of the business, driven in part by great new products like the Expedition and the Navigator, where we're seeing 5-digit increases in average transaction prices. But basically, it was commodities that kind of held us back.
And I'm assuming that you would lay that blame sort of at the footsteps of the White House and all this talk that we've had about tariffs and rising steel prices and aluminum.
Well, part of it is just the economic cycle. You're seeing a lot of the commodity cycle that had been down for several years is now coming back, and we're seeing growth in almost every part of the world. So that's a big driver of that. But clearly, the threat of tariffs, because obviously they're not in place yet, the threat of tariffs, particularly we believe on steel, had an impact on market prices.
So what are you doing moving forward? Are you trying to hedge against that problem? Do you think that it's only temporary and that this is part of a negotiation and, you know, that we're not really going to have this trade war? How are you guys playing it?
Well, what we're doing is we're focusing on two things. One is we've got to have great new products where we can get as much revenue as possible. I think Expedition, Navigator are two, really relevant and real-time examples of that. But the second is fitness. So today we're announcing that over the 2019 through 2022 period, since October, when we had an investor event in New York, we've identified $11.5 billion of incremental cost and other efficiencies in the business, a third of which we'll have by 2020. So what we have to do is become more fit, but then on top of that have a great new product.
So let's talk about the product a little bit, because everything that I read ahead of this, they're talking about the fact that the consumer is really shifting towards the SUV, and that has been hurting your business. But you talk about the iconic brands of Expedition and Navigator. Why aren't you able to capitalize on that more if the consumer trend really is towards the bigger vehicle?
Well, actually, we are capitalizing on that. We're building everything we can. In fact, we can't meet demand. We're investing in higher line speed at our Kentucky truck plant in order to at least try to keep up with that demand. And I think it's also enabling us to get these fantastic transaction prices. But overall, we're seeing consumers around the world, not just in the United States, move towards more SUVs as well as trucks, and that's very positive for us.
Yeah. What can you do to capitalize that further, especially when you're talking about the F-150?
Well, one of the things we can do is we can come out with even more exciting derivatives. So, of course, the Raptor, which you're familiar with, is fantastically successful. One of the things that we just introduced is a diesel version of the F-150 for the very first time, getting 30 miles per gallon, the best in the segment. So what we have to do is keep giving customers, the things that they want and they value and they're excited about and that they'll pay top dollar for. But that is certainly something that's top of our list of things to do, and we're doing it all over the world.
Yeah, and build them faster and increase margin. It's a lot to work on there. Bob Shanks, get back to work. Thank you so much. Appreciate your time, sir.